Welcome to our summary of the Federal Budget 2018. The government clearly flagged over the last few weeks that tax cuts would be the centrepiece of this budget, and indeed, this is the case. Compared to both the 2016 and 2017 budgets, this budget was not as significant in terms of the overall impact on our clients, strategies, and the broader industry. There were, however, some important announcements that may impact you or may provide you with some new opportunities. It is important to understand that the measures announced in this budget are proposals only and will not become law until legislation is passed. There are a number of changes to taxation this year. These include confirmation that the Medicare levy will remain on hold at 2%. Some relatively significant reductions in the personal income tax rates, which will be staggered over a number of years, and an extension of a previously announced measure for small businesses for another year, relating to the upfront deductibility of eligible purchases. The income threshold at which the 32.5% marginal tax rate applies will progressively increase to $200,000 by the 1st of July 2024. This table summarises the new income tax thresholds as they will apply to various levels of income from the 1st of July 2018 to the 1st of July 2024. Low and middle income earners will benefit from the first phase of tax cuts with a $530 tax offset to start from the 1st of July this year. For those earning below $37,000 per year, their maximum tax offset will be $200. It will be worth noting that this is a lump sum via a tax offset in your annual tax return. Those earning between $37,000 and $48,000 will receive a maximum of $530 a year via the same tax offset. Anyone earning between $48,000 to $90,000 will also receive a tax relief of a maximum of $530. The tax offset will also apply to those earning more than $90,000 and will taper off to zero as the income reaches $125,000. The 32.5% tax bracket will be extended from $87,000 to $90,000 from the 1st of July. Currently, small businesses with an annual turnover of $10 million or less are able to claim an immediate deduction for eligible assets costing less than $20,000 each. This measure will be extended for a further 12 months until the 30th of June 2019. While not as significant as the changes to super we have seen in previous budgets, there are a number of proposed changes to super. These include opt-in insurance requirements for certain members, changes to protect small super balances, work test exemption to recent retirees with super balances of less than $300,000, an increase to the limit on members in self-managed superannuation funds, reducing audit requirements for eligible SMSFs from annually to once in every 3 years, changes to address certain inadvertent breaches of the concessional contribution cap. In summation, superannuation continues to be attractive for retirement savings. There is an opportunity to contribute as a recent retiree, and there is increased protection for smaller account balances moving forward. So, you need, as a member, to consider your need for insurance before accepting or taking up the opt-in arrangements. Regarding taxation, personal tax cuts for 6 years from the 1st of July 2018. Tax cuts are significant for some by 2024, and there is no change to the Medicare levy for now. Lastly, Social Security, relatively minor changes here. Retirees may now qualify for the pension loan scheme, whereas in the past they've been unable to. There is moving forward a more favourable assessment of employment income, and there is some great news for self-employed persons. Therefore, so during your next meeting here at Affinity Private, we will discuss the relevance of the proposed budget with you at that time. Should you require any further information or advice prior to our next meeting, please do not hesitate and contact your advisor at your convenience. Thank you.